Have you been bitten by the gold bug the last couple months? Gold has been skyrocketing. But what are you going to do after August 11th and the big drop? I'm Champion Trader Kevin Davey, and let's find out. So, since the middle of spring, gold has been in a nice uptrend. And the last month or so, it's really done good. If you had bought at the beginning of July, up until August 10th, for every futures contract you bought, you'd be up about $20,000 per contract. That's pretty awesome. The problem is, if you had held on through August 11th, you would have lost half of those profits in one day. So buy and hold has a lot of risk, especially in something as volatile as gold. So the question is, what can you do? Well, I algo trade, and so that means I create strategies that buy and sell for me where I don't have to figure it out. I've tested these strategies, I know they work, and I hope they keep working in the future. So I actually have 6 strategies that I can trade for gold. Now, I don't trade them all every month because of correlation with other strategies and some diversification, but I do trade some of them. So let's take a look at all 6 of these and see how they worked the past month or so, and especially how they worked on August 11th. So strategy number 1 features 30-minute bars. And you'll see that through all 6 that I'm going to show you, I'm using 5 different bar lengths for my strategy. So I try to mix it up a little bit. Well, anyhow, strategy number 1 did really well on August 11th. And in fact, it did well the month of July and the month of August so far. Strategy number 2 is a 236-minute bar, which is really kind of weird, but that's what I use. Now, it stayed on the sidelines August 11th, which isn't necessarily a bad thing. And it made money in July, but lost money in August. That's not too uncommon with trading algos. Strategy number 3 is a 472-minute algo, and it did pretty well in July. It's doing pretty well in August, but it too stayed on the sideline during August 11th. That's not always bad, right? Strategy number 4 is another 30-minute one, and it's done well in July, well in August, and again, it stayed on the sidelines August 11th. So you're starting to see a theme here. You don't need to be trading all the time with your algos. You can pick your spots. Strategy number 5 was down in July and up in August, and it did pretty well on August 11th when it was in the market. So hats off to number 5. And strategy number 6, on August 11th, it was on the sidelines, and in July it lost money, but in August so far, it has made money. And so, of course, if you had bought and held starting in the beginning of July, you'd be up $10,000. Not bad, but you would have lost that much just on August 11th. That's pretty scary. So you can see with all the algos I trade, there's some interesting lessons here. Lesson number 1 is to have multiple strategies. That way you take advantage of different things in the market. You don't need one strategy to do everything. You can have multiple strategies. And sometimes they trade the same direction, sometimes opposite directions, but overall, they should give you some diversification. Lesson number 2 is that staying on the sidelines is not bad. Nobody said you had to trade every single day or every single bar. You can have strategies that pick their spots, that maybe only trade once a week, for example, or on certain days of the week, or just when certain indicators and patterns line up. You can stay on the sidelines, keep your money safe. That's always a good way to do it. Point number 3 is that no matter what kind of algo strategies you build, you've got to test them all. I use a process that I call the strategy factory approach. It's a trademarked process for developing trading algos. And it works pretty well for me, and it works pretty well for my students. But the point is, it's an objective process that I use to see if a strategy is worth trading live or not. And no matter what you do, make sure you test your algos and make sure they're good to trade live. And the fourth point here is something I mentioned earlier where I said I don't trade every one of these right now. Now next month I might trade different ones of the gold strategies I have, but the point is I try to remain as uncorrelated as possible. So meaning I'm not going to trade two gold strategies if they're both always long or both always short, because that's just doubling my risk. I try to trade uncorrelated strategies, even within a specific instrument like gold. So I limit my exposure whenever I can, and that helps limit the downside, which is really what you have to worry about. And if you're not worried about the downside after August 11th, maybe you'll never be worried. But a more than $100 drop in gold in one day, that's over $10,000 per contract. That's huge. And if you're trading a lot of strategies that are all correlated, that's going to come back to bite you. So to sum up, have multiple strategies. Stay on the sidelines sometimes. Test all your strategies properly and try to be diversified. If you do those things, gold or any other market is not liable to bite you. If you like this video, give it a thumbs up or hit the subscribe button. And please leave a comment. How did you fare on August 11th? I'd like to know. I'm Champion Trader Kevin Davey. Thanks for watching.